Picture this. It's a Tuesday morning. You're at your kitchen table with your coffee, and you open your mail. There it is, your annual property tax notice. The number is bigger than last year. It's always bigger than last year. And somewhere in the back of your mind, you remember signing up for that BC Property Tax Deferment Program a few years back because it felt like the smart, responsible thing to do. The government said you could push those payments down the road, let the equity in your home handle it later. It felt like breathing room. It felt like a gift. But here's what nobody told you about that gift. Starting this year, the terms have quietly changed. And if you are one of the more than 83,000 BC homeowners currently enrolled in that program, the clock is ticking on a decision that could cost you tens of thousands of dollars over the next decade without you ever signing a single new document. My name is Joseph, and welcome to Canada Pension Guide, the channel dedicated to giving Canadian seniors clear, verified, and actionable information about the programs and policies that directly affect your retirement. If this is your first time here, I want you to hit that subscribe button right now, because what we cover on this channel is not opinion. It is research. And today's topic is one of the most important and most overlooked financial warnings of 2026. Now, before we go any further, I need you to stay with me for the next few minutes. I know the words property tax can make eyes glaze over, but I am asking you to push through that feeling today. Because if you are enrolled in BC's Property Tax Deferment Program and you do nothing before June 1st of this year, your account will automatically roll over into a brand new interest structure, one that compounds monthly, costs significantly more than the old rate, and triggers without any warning letter required from the government. No phone call, no reminder, just a quiet, automatic change that begins working against your retirement equity the moment it kicks in. You have time to act, but only if you know what you are dealing with. So let's break this down into 5 critical things every BC senior enrolled in this program needs to understand right now. Number 1, the interest rate has fundamentally changed, and the difference is not small. Under the old rules, the BC Property Tax Deferment Program charged what is called simple interest. For the regular program, that rate was 2.95%. Simple interest means you are only ever charged on the original amount you deferred. The interest does not grow on top of itself. For many seniors, this made the program an incredibly affordable tool, sometimes even profitable. Because the rate was so low, you could invest that tax money elsewhere and come out ahead. That window is now closed. For taxes deferred in 2026 and beyond, the program is switching to compound interest, set at 2% above the prime rate of the government's principal banker, compounding monthly. What that means in plain language is that every single month, on the 23rd, the interest you have already accrued gets added to your balance, and then next month, you are charged interest on that larger number. It snowballs. Slowly at first, then faster and faster. On a $5,000 annual property tax bill, you were looking at roughly $150 in interest per year under the old model. Under the new compound structure, that same bill generates approximately $350 in interest in year 1 alone. And that number grows every year you stay enrolled. Over 10 or 20 years of deferment, we are talking about a potential difference of tens of thousands of dollars coming directly out of the equity you have spent a lifetime building in your home. Number 2, the June 1st deadline is not a suggestion, it is the point of no return for auto-enrolled seniors. Here is the trap that is catching people off guard. If you signed up for automatic renewal when you first enrolled in the program, and many people did, because it was the easy option, your 2026 taxes will automatically defer under the new compound interest terms unless you contact the government before June 1st to opt out. The government has confirmed this. There is no obligation on their part to send you a warning letter before this happens. The auto-renewal simply processes. Your account flips to the new terms, and unless you check your statement of account in April and take action, you may not even realize it has happened until months later. The opt-out process itself is not complicated. You log into your eTax BC Property Tax Deferment account, send a web message with the subject line, Opt-out, Auto-Renewal, and you are done. Alternatively, you can call 1-888-355-2700 and do it over the phone. That is it. 2 minutes. But it must happen before June 1st, 2026. Number 3. Opting out does not mean you owe everything immediately. This is the misunderstanding that is keeping some seniors frozen in place, and I want to address it directly. If you opt out of the auto-renewal for 2026, you are not triggering a demand for full repayment of your existing balance. Any taxes you deferred in 2025 or earlier will continue under the previous interest rules. Opting out simply means you are choosing to pay your 2026 property taxes the regular way directly to your municipality instead of adding another year of deferment to your account under the new compound terms. These are two separate decisions. Your past balance stays on the same terms. Your future deferments are what change. Do not let the fear of a big number on your existing balance paralyze you from making the right decision about 2026. Number 4. Your homeowner grant is a separate issue, and missing it is an expensive mistake. Many BC homeowners do not realize that the homeowner grant, which can reduce your property tax bill by up to $845 for seniors, is not automatically applied just because you are enrolled in the deferment program. Even if you have automatic deferment renewal turned on, you must still claim your homeowner grant separately every single year. If you forget, you lose it for that year. There are no exceptions. When you contact the government to sort out your deferment situation before June 1st, add homeowner grant confirmation to your checklist. It is a separate claim, and it is money that belongs to you. Number 5. The government placed a lien on your property the moment you enrolled, and it affects more than just your taxes. When you were approved for the BC Property Tax Deferment Program, the Ministry of Finance registered a restrictive lien against your property. This is not a scare tactic. It is a legal reality. That lien limits the types of changes you can make to your property title while you are enrolled. If you are planning to add a family member to your home's title, refinance your mortgage, take out a home equity line of credit, or sell your property, that lien is part of the equation and must be addressed through the program first. If you have a mortgage or existing secured debt on your property, you were also supposed to contact your lender before enrolling, and if that did not happen, there may be conflicts with your loan terms that are worth reviewing now. I want to pause here and ask you something. Drop a comment below and tell me your province followed by the word truth. Just your province and the word truth. I want to see how many people watching this right now are dealing with programs and rule changes that were never properly explained to them. You are not alone in this, and your comment helps this information reach more Canadian seniors who need it. Now let's talk about what you actually do from here, because I do not want you to leave this video feeling anxious. I want you to leave feeling equipped. Your protection plan is straightforward, and it has 4 steps. Step 1. Check your enrollment status today. Log into your eTax BC account or call 1-888-355-2700 and confirm whether you are currently enrolled in automatic renewal. If you do not have an eTax BC account, you can set one up using your account number and letter ID from your April statement of account. Step 2. Make your June 1st decision. If you have the cash flow to pay your 2026 property taxes directly, or if you have enough equity and income flexibility that the new compound interest rate represents a meaningful cost to you, opt out before June 1st. If you are genuinely house rich and cash poor, and deferment is still your best option, you may wish to stay enrolled but go in with full knowledge of what the new terms mean for your long-term equity. Step 3. Claim your homeowner grant separately. Do not assume it is handled. Confirm it is claimed for the 2026 tax year. Step 4. Use the official interest calculator. The BC government has a free official interest estimation tool at forms.gov.bc.ca. Run your own numbers. See exactly what the compound interest model means for your specific balance over the next 5, 10, and 20 years. That number will make this decision very clear. Everything I have covered today is verified through official BC government sources, the Property Tax Deferment Program page on gov.bc.ca, the Interest and Fees section, and the Office of the Seniors Advocate's public update on this exact issue. I will put all of those direct links in the description below so you can go straight to the source. This is exactly why Canada Pension Guide exists. Not to alarm you, not to sell you anything, but to make sure that when governments change the rules on programs you depend on, you are the first to know and the best prepared to respond. If this video helped you, please share it with one person in BC who owns their home and is over 55. They may be enrolled in this program right now without realizing what is about to happen to their account. A share takes 5 seconds and it could save them a significant amount of money. Subscribe to this channel so you never miss a verified update on CPP, OAS, GIS, and the provincial programs that shape retirement in Canada. And leave that comment your province and the word truth so I know you are out there and I know this is reaching the people who need it most. Take care of yourselves. I will see you in the next one.